Welcome to the Financial Legacy Podcast. I'm your host, Maria Ellis. On every episode, I will bring you my perspective and the perspective of my guest on state and financial planning topics. Here at the Financial Legacy Podcast, we are changing lives one person at a time. To help you create and enjoy your financial success, connect with us at financiallegacy.live. Today, I'm pleased to introduce you to John. He is working with Orvin Diggs, and he's going to give us a lot of information, especially statistics that you have often asked about the Brooklyn market. So, John, welcome to our show.
Thank you, Maria. It's good to be here.
Yeah, tell us about Brooklyn specifically. What's happening in the Brooklyn market?
Well, if I had to sum it up, I'd just say Brooklyn's hot. It's just gangbusters.
Yes.
As everybody knows, 2020 was the year of COVID, and that drastically affected the New York City real estate market simply because there was a lockdown and business was physically prevented from happening. So activity just went to complete minimums, just de minimis activity across the board. The lockdown ended and the markets reopened at the end of June. And Brooklyn sprang back up. It just didn't miss a beat. It just took off like a rocket. Manhattan, on the other hand, it took a while for that wave of supply to start meeting the buyers, and it didn't really start getting going until, say, October, November. But Brooklyn popped right back up and just hasn't missed a beat since.
Yeah, and also part of the attractiveness of it is that there's more space. There are no newer units in many cases.
Mm-hmm.
And so for young families who were living in Manhattan and now want more space, that's ideal, correct? Tell us the difference in prices between, let's say, Manhattan. Let's look at a two-bedroom Manhattan versus Brooklyn, comparable ones in terms of new development.
Sure. So in Manhattan, really these prices range all over the map. So I'm just going to give you very general numbers, and everything really boils down to the building itself. Each building is its own market, and within that building, you've got different tranches of value. So your penthouse price per square foot is going to be head and shoulders different than your first, second, third floor, two-bedroom price per square foot. But with that said, let me just give you some general rundowns here. Manhattan, you're looking roughly around $2,000 a square foot for new development. Whereas in Brooklyn, depending on your location, of course, that figure is usually much lower, and you could get it in somewhere in the $1,500 to $1,300 a square foot level, depending on the development. The amenity sets, if you're looking at some of the high-rise buildings, are very comparable. So your downtown Brooklyn new development high-rises have very similar amenities to some of the Manhattan ones, in which case, if you're just looking at what you're getting for your money, Brooklyn is a much more compelling option. But the other thing that's interesting about Brooklyn new developments as compared to Manhattan new developments is most of them are on a much smaller scale. So you're having buildings in neighborhoods such as Bedford-Stuyvesant or Cobble Hill or Clinton Hill or goodness sakes, even Gowanus, in which your building height is not more than, say, 6 to 8 stories. Now, obviously, there's some exceptions, but what that gives you is gives you sort of a brand new building, gives you a lot more space, and it gives you that privacy. So yes, you're sharing a building with other people. It's not necessarily a townhouse, but you're living in a unit that no one else has lived before. Everything's brand new. So it's, in this day and age, I think that's something a lot of buyers are really resonating with.
Yeah, and I think also people that like privacy and younger families who might want to have a backyard, let's say, Brooklyn offers that opportunity to be able to have this space and to be able to enjoy the backyard, and oftentimes very close to the park. Park Slope, for instance, is a very nice area, correct?
No, it's gorgeous, and I think you hit the nail on the head, which is that a lot of people want to be by these parks because I think outdoor activity, once it's taken away from you and you're forced to quarantine in your home for however long it takes, it really becomes a joy to be out and about. And the closer you can be to something as wonderful as Prospect Park or McCarran Park up in Williamsburg, it just opens up your options, and it sort of makes it a little bit more easy to live in this city.
Yeah, and in this period of COVID, I mean, we're looking for those people who may be listening later on. This is around February of 2021, so we are still in New York City. In the New York City area, we're still restrained and constrained in terms of what, wearing the mask and keeping 6 feet apart and so on and so forth. But for families who have young kids, to be able to bring them to the park, it is, open space is really nice. It's just provides a lot of, just that relaxing time and an ability to have fun with your kids. So I think that's a very attractive situation. Clearly, New York, in Manhattan as well, we have Central Park. I mean, there's a huge park, right, from 59th Street all the way to 110. So it just depends on the pockets that you're interested in, the neighborhoods. Each neighborhood, whether it's Manhattan or whether it's Brooklyn, there are unique and differences in each of the neighbors. So it's really very appealing to to different people who have different interests. For those people who want privacy, like you were saying earlier, John, there are some new buildings that are 5-6 stories and provides a lot of privacy, and yet they are new buildings. So what do you recommend for people who don't know what areas they would like to live in, whether in terms of, let's say, as an investor, return on your money? Do you think that Brooklyn or Manhattan will appreciate more over a period of 5 to 7 years?
You're putting me on the spot. Well, it's a great question. So just let me answer the first part about where, if you're in New York, or generally speaking, you probably already know where you want to live. And in fact, I think a lot of websites have these, let me tell you about the neighborhood. And I think if you've been in New York for a certain period of time, you know which neighborhoods are interested in, and you know which ones are not for you. But if you're an investor, on the other hand, and you're sort of looking at return on your money, and you're basically trying to look at, say, cap rate or some
right.
sort of formula to kind of give you a hint of where that return is going to be, it's a very tricky time. Cap rates have historically been very low in Manhattan, and they were really, really low pre-COVID. And when I say low, I'm talking like 3% or below. I mean, there's really
right.
not a lot of room here. So if you're looking as an individual investor trying to buy a condo, rent it out, and make that return, it's going to be very, very tricky. I'm frankly not sure if new development is the right option for you at the moment. But the nice thing about the market we're in now is that it's been completely disrupted, and prices are negotiable. And this is the first time this has happened, especially for some of the luxury product out there, that the prices have been so negotiable, in which you're getting concessions from your developer, like, say, they're going to pay the amenities or perhaps give you a storage container, because we have this inventory backlog that's sort of simmering. So this is a great time to be in new development, but I don't know if it's going to pay out necessarily now. But if I look forward 5 to 7 years, I can certainly see us having an inventory crunch in the new development sector, simply because no one's building it right now. Because the fact of the matter is, right now it doesn't pay to start building new buildings, because the sales right now are low. But fast forward, I mean, it takes years to get these buildings up and out of the ground. So you fast forward several years, and you could find yourself in an inventory crunch. And at which point, yeah, it would have been great to buy now. So I think you're going to have to take the long-term view. I think you're going to have to go over some rocky periods in which cash flow may be neutral to slightly negative at best, but hoping for that appreciation in the long run. Outside of new development, I think that there's a very interesting opportunity right now in multifamily. The multifamily cap rates are also low. But what COVID did is it really, really crushed rental rates, and that brought cap rates down even farther, simply because you're getting less money from your tenants. I think that's going to create a big shakeout among some of the landlords that have sort of levered up and used their buildings to sort of cash out and buy other buildings, and sort of built a levered portfolio. So if you can find some multifamily buildings that are being broken off and sold by banks, I think it's a very attractive proposition now. But again, it's the kind of thing that the short term is going to be very rocky, and it's really a long-term play.
Yeah, it is definitely a long-term play. This is why some of the institutional money are actually negotiating with the developers, new developers who are highly leveraged, and they're buying bulk units or units in bulk, and be able to get some.
Oh, I'm sorry, you dropped out for a second. I didn't hear the question.
We're talking about the opportunity that there is whenever there's excess inventory, and whether it's Manhattan or whether it's Brooklyn, there's currently institutional money that is going after these new developers, especially those who are highly leveraged, and buying bulk units in bulk and being able to get some significant discounts, which in turn on a longer term basis is going to improve your cap rate overall.
That's true. And those are really, they're hard to find. It really depends on the actual, if you're talking about new development, it really depends on the specific situation of that developer and that building. So it's hard to find these things, but they can be very fruitful if and when they are found. It just takes a lot of digging. But again, I think you're absolutely right that it could be a very good play for the next 5 to 10 years.
And for the individual investor, as an example, we were talking about on prior podcasts where not everything that you see in terms of inventory of the new development is actually available. There is much more that is available, correct? Because not all the units are actually shown at any given point in time.
That's correct. So if you're looking at new development, let's say it's a building and the unit number 3A is for sale, and that's it. Well, there's a chance that 4A, 5A, 6A, and 2A are also for sale. They're just not available yet. So dealing directly with the developer and the developer's agents, especially if you have an agent who can make that connection, can really often unlock some hidden inventory.
Yeah, I was working with a client from Singapore, and she specifically wanted the main door, the entrance door, to be facing north. So, so we have to really speak then with the developer to find out if within the inventory that yet is not published or made available to the general public, whether they had a unit that that whose main entrance door was facing north. So so there are all kinds of special needs and requirements that people have. So working with an agent that is savvy enough to be able to identify those opportunities, I think, is important.
Yeah, that's a tricky one.
Yeah. So there have been a lot of new developments. How many new apartments do you think are currently available? Are we really talking about, we are talking about excess inventory within the new developments, right? And that's going to take a while for the market to absorb it.
It is. So if you look at, say, Manhattan and Brooklyn combined, we're probably looking at a range of, and again, these numbers are very opaque because it's based on Schedule A's that developers file, but they can always be amended, and sometimes they're late to be filed. But I would say there's anywhere between 13 to 15,000 units that have yet to hit the market that are sort of, quote unquote, shadow inventory. If you break that down into Brooklyn, in the last, say, 3 to 4 years, we've probably got about 7,000 units, so a little bit less than half are in Brooklyn. But again, these numbers they just exist on paper right now, and some are built and they're being marketed right now. But the ones that have not yet been built, the ones that are sort of still conceptions, those can just disappear, or perhaps they turn into rentals, or perhaps it just never happens. So there's a lot of leeway in those numbers. I prefer to look at, say, what's actually on the market now, and then give a little bit of a fudge factor. So if I look at what's on the market now in terms of new development, say Manhattan is roughly 1,000, Brooklyn's roughly 700, and then you can kind of up that by, say, 15 to 20% to kind of get an accurate idea of the number of units that are currently being marketed.
And whether it's an individual investor or an institutional investor, because of the excess inventory right now in the new development, there is an opportunity of good negotiation, correct?
Certainly. So I think that's one of the things that makes this market so good. And I don't mean to be flippant with the word good. I mean, so yes, COVID really has hurt prices, and I'm not saying prices are up. I think prices, if you look at median price in Manhattan, it's probably down by about 5%, from this year ago period to now. Brooklyn is probably, I would say, I haven't looked at the numbers on Brooklyn in a while, but I would not be surprised if it's actually up. And I think we're going to have a rocky period the next few months as we tend to digest these COVID sales. And then I think, once Q3 starts hitting, I think you're going to see year-over-year numbers really way up. That being said, when I talk about a good market, I really mean in terms of, is it a good market for buyers or is it a good market for sellers? And right now, it's a good market for both of them. So what do buyers have? Well, buyers have the opportunity. They have choice. They've got a lot of inventory to choose from. That's good. They have negotiations, so they can get a one-on-one negotiation with the seller. So they don't necessarily have to pay the full asking price. They might pay 99% of the asking price in some places in Brooklyn because they're really, really tight markets. But if you're looking at Manhattan new developments, you could be paying, you could get a 15% or so discount. And the last thing they have is the money is exceedingly cheap. So if you're looking at mortgage rates are at or near historical lows. And so you put those three things together, it's a great time for buyers. Sellers, on the other hand, it was really looking ugly for sellers. I'm not going to lie, in July when the market opened and a wave of supply hit. But that supply has steadily been chipped away, and especially in Brooklyn. And suddenly sellers are finding themselves holding on to a piece of property which has no competitors, and they're getting they're getting buyers coming to their open house. They're getting buyers, handing them offers, and they're getting into best and final bidding wars, so to speak, with other buyers. And so that's a great market for sellers. So especially if you're priced right as a seller, this is a good market.
Yeah, exactly. I think that pricing the property correctly is very important in terms of making sure that the client gets the best possible overall price and that it is sold on a timely basis. Because if it is, if it stays too long in inventory, brokers and clients begin to wonder what's wrong with that particular building. So advice really for sellers is to work with their agents to make sure that they are able to list their apartment on a competitive basis relatively to what's available in the marketplace that are comparable.
Well, you're exactly right. And I actually just sent a piece to the Wall Street Journal today. And basically that's exactly what we looked at is how long has an apartment been on the market? And then what was the listing discount for that unit? And we looked at it over time. And despite this huge speed bump of COVID to sort of shaking the market out, if you were quote unquote priced right, which means you sold fast and you sold in less than 30 days, your listing discount, your median listing discount, which means half or above, half or below, was 1.9%. That's fantastic. And so if you're priced it right, you're selling within 30 days, you're basically selling at your full asking price. If you're on the market for more than 4 months and you're just letting it linger thinking, well, I'll put it up at 10% higher, then the market's going to come to me and that way I can negotiate down. I've got bad news for you. You're going to take a long time to sell, and your median listing discount is going to be, right now it's looking almost 12%. So you're forfeiting all of the negotiation you thought you had plus some.
Yeah, and that also is very applicable to what we call for sale by owners. Oftentimes, the for sale by owners said, "Oh, I'm going to save myself, 5-6%." They don't want to pay the broker's commission, and also they just put in such an unrealistic price, hoping that an uneducated buyer is going to come and make an offer, and they take, I have seen situations where it takes 6-9 a year before they could actually sell. And when they sell, it is highly reduced because the buyer who is sophisticated knows that that's overpriced, and that because there isn't an agent involved, they could even negotiate even more with the seller. So what's your advice for sale by owners?
It's tricky. So I think you hit the nail on the head, which is that, if you look at buyers today, they're only getting more and more savvy. They have more and more access to information. And they can easily look at, say, Realtor or Zillow or KW NYC, or they can look at Urban Digs, and they can see where other similar units sold, and they can get an idea of price. Same thing with sellers. They can look at what something sold a few blocks away and say, all right, well, I'm going to get that price too. But the problem with all of this information is that it's not really knowledge. And I think that's why agents, and this is one of the things that I learned when I kind of got into the real estate analytics business, is that there's an art and a science here. And one of the values that an agent brings to the table is they can take all of this information and they can sort of channel it into a knowledge based on their own experience. And they can look at a list of comps and say, well, yes, this one traded much higher than yours, but it has a terrace, it has a better view, it's 2 minutes closer to the subway, and they can break down the differences between each one to sort of really hone into where the market's trading for your exact unit. Moreover, if you have a good agent and you're trying to buy or you're trying to sell, that agent can pick up the phone, find other units similar to yours that are in contract, and talk to that agent and kind of get a sense of, all right, well, you just went through this process, I'm going through it now. can you give me any hints on pricing and what was traffic like? What was the feedback like? And that can be directly translatable to a higher price and a faster time on the market for you.
Yeah, and that's a lot of knowledge and a lot of value that agents bring to the for sale by owners. So yeah, because oftentimes they have a certain number in mind, but that may or may not relevant to the unit, the condition of the unit versus others who result in the building that maybe they are a higher floor, so they have a new renovated kitchen or have replaced the bathroom or whatever. So that intelligence, I think, is important again to try to get the best, highest possible price and to sell the property within a specified period of time, ideal time. So thank you for that. I think that will be very helpful to our clients. So if you were to buy right now, let's say you're looking to buy one nice one bedroom, 800, 900 square feet, where would you buy? Would you buy in Manhattan or Brooklyn? If you were an investor, let's say.
Well, if I'm an investor, I would probably do my homework. I think there's a lot of things that are changing very quickly. As we mentioned earlier, the whole rental market was completely decimated by COVID, and it's starting to recover, but rents are still down. So I would want to look at areas where rents have kind of been the most stable. And I think in that area, you might be looking at areas in Manhattan, such as Yorkville, where there's a lot of rental apartments, where there's a steady demand. Anything downtown Manhattan is always going to be in demand. If you can certainly find something in the price range, that's the other issue. Other than that, there's a lot of Brooklyn neighborhoods that I think they're sort of up and coming. I think Clinton Hill is great. Bed-Stuy, you can perhaps get some deals. Gowanus is great. And it's just really a question of it's a needle in a haystack, honestly. You just have to sort of do your homework and find that one that works for you, that's got the value, that's got the value proposition all baked in, because a lot of these places look great on the outside, but you get in and you realize you might have to do a complete gut renovation, or the expenses on the monthly side might be a lot higher than you imagined. So it's going to take a nice Excel sheet to kind of figure all this out.
Yeah, some of my best clients are the highly sophisticated clients who actually use a spreadsheet and put the buildings and the square footage and location to the trains or amenities or whatever, and then be able to make an educated decisions. And I think that having all the information, not so much that it gives you analysis by paralysis, but enough information that you can make an educated decision. That is good. Thank you for all this valuable information that you have provided to us, both to buyers and to sellers, for those to sellers who use an agent and to sellers who want to sell their own property. I think that knowing the market and knowing how best to proceed is very important. So we really appreciate Urban Digs for their contribution to providing us with data that allows our clients to make the right decisions, whether they are buyers, sellers, investors, or people who are looking for their primary homes. So I have a sort of a fun question to ask you. If you have not chosen real estate, what other career you have chosen? And with that, we will close.
Well, that's a good question. I should say that I don't think I necessarily chose real estate. So it's interesting. So
real estate chose you?
I suppose, yeah. So before Urban Digs, I was a trader. I had a small stat ARM fund, and everything was fine. And then the high frequency people kind of came in, and they kind of took away a lot of my edge, so to speak. I just wasn't fast enough, and I didn't have the capital to invest and make myself fast enough. At the same time, I was buying an apartment in Manhattan, and Noah Rosenblatt was my broker. Oh. And he was talking about, and I noticed the dearth of data for all of these units. And there's an asking price of, say, $1.5 million. Well, why is it $1.5 million? Because the listing broker says it is. Yes, but it doesn't make sense because I went through this and this and this and this and this, and these are all 1.25. So where does this extra money come from? That's exactly the problem I'm trying to solve, said Noah. And I said, this is fantastic. I like it. Let me help you. So I don't necessarily know if I'm real estate or if I'm just a problem solver. And I just really enjoy solving problems, and I enjoy building things. So that's what Noah and I have done. We're solving problems, we're building stuff, and we're having fun.
And being in the field that you enjoy is no matter how much longer you work, the days go much faster because you enjoy the process. So thank you for your contribution to the real estate market. To you and Noah and Urban Dix, greatly appreciate your time. Thank you so much.
Thank you, Maria. Always a pleasure.
Thank you for tuning into the Financial Legacy Podcast with me, Maria Ellis, and with John. We can locate John at Urban Dix. I think that give us your contact info.
Sure. So John at urbandigs.com. That's John. Always happy to answer questions. We have a site, urbandigs.com. It's got a wealth of information. If you're connected with an agent in the city, they can access even deeper levels of information. And we're always happy to help.
So thank you again for joining us. We're changing lives one person at a time by helping you create a comprehensive financial plan for your financial legacy. To help you connect with your financial success, connect with us at financiallegacy.live for your complimentary consultation. Thank you again. Thanks, John. Be well.
Thank you. Bye-bye.
In providing answers, neither Maria Ellis nor the Financial Legacy Podcast and guest speakers are acting as certified financial planners, advisors, certified financial analysts, CPAs, economists, accountants, or lawyers. Neither Maria Ellis or the Financial Legacy Podcast and guest speakers make any recommendations as to any specific securities or investments. All content is for informational and general purposes only and does not constitute as financial or legal advice. You should consult your own tax, legal, and financial advisors regarding your particular situation. Neither Maria Ellis nor Financial Legacy Podcast and guest speakers accept any responsibility for any loss that may arise from accessing or reliance from any information in this podcast. And to the extent permitted by law, we exclude all liabilities for any loss or damages derived directly or indirectly arising from the use of the information.